The start of a new tech bull market.
Growth remains robust. I think we're going to see a lot more deflation going forward.
Is the bull case getting better?
Look at the home builders. They're basically back to highs. Semiconductors, basically back to highs. The rally is broadening out.
The Fed has gone back into the hibernation for, I think, the next 6 years.
Is the bear case dead?
No, because again, the Federal Reserve raised rates by a lot. That's going to have some effects throughout the economy beyond what we've seen.
So yields have peaked.
It's a matter of waiting for the cuts to come.
When do you think those are coming?
Doesn't matter. If you look at a 6-year chart of ARK, the growth tech, and you lay that on top of a 6-year chart of NASDAQ during the dot-com era, it's kind of eerie the way that they mirror each other. Huge peaks and then huge declines. NASDAQ declined 77% from its peak in the dot-com era. ARK was down at its lowest 80%. It took 2.5 years for NASDAQ to fully decline after the dot-com peak. We just passed the 2.5-year anniversary of ARK's peak in February of 2021. A lot of enterprises are getting into AI and building applications and models that are going to use their chips, and it's going to continue beyond just one quarter. I think it's the start of a new rally for the market.
I think the Fed's overdone it. I think we're going to see a lot more deflation going forward. We are going to hit that 2 handle, and we will go below it, and would not be surprised to see CPI inflation negative at some point next year.
The best case scenario for stocks is one where growth remains robust, so you deliver on the earnings growth that's already being forecasted, and the Fed becomes easier and kinder, which means that you get good earnings and you can sustain an elevated multiple because the Fed isn't having to raise interest rates as much, which would put downward pressure on multiples. And that's why markets are rallying so much. That fund manager survey showed that people are the most long or overweight bonds since '09. It's a record number of participants saying that they expect rates to fall. When something becomes so very consensus, the pain trade is usually the opposite direction.
Well, if the Fed cuts, it's because it's desperation. They have to because the economy has gone into the tank, which leads them to have to cut.
Does the market confirm the soft landing as we go into 2024? If the market remains really resilient and robust, it's effectively saying we don't need those insurance cuts, but the Fed is still going to give them to us.
Is the bull case getting better?
Yeah, I think the bull case has been getting better for some time now. I don't think that anybody gave me any indication that the consumer was suddenly suffering in a meaningful way.
Okay, well, is the bear case dead?
No, I don't think the bear case is dead. You're starting to see a little bit of the indications that we were worried about a year ago. Credit card delinquencies are starting to normalize, move in the wrong direction. Jobless claims are starting to tick up. So there's a couple of things on which you can hang your hat to say, well, maybe we're starting to see the early inklings of the slowdown, the long-awaited slowdown.
I wonder if we're starting to see, as the bulls would suggest, the early inklings of a broader rally. S&P equal weight up 3% on the week. Russell's staring me right in the face here. On the week, up 5.35.
Sure.
So these, other dormant areas of the market have suddenly woken up.
Look at the home builders. They're basically back to highs. Semiconductors, as a group, basically back to highs. The rally is broadening out. I'm not positive that's sufficient by itself to get me super enthused about the market, or at least more enthused than I would have been otherwise.
Well, I'm not saying by itself. That's the whole point, is that it's not by itself. It's that if you have a broadening rally, but you still have, the hot area of the market, the mega caps go up, but now you finally get some pickup from the underloved, underappreciated, and just sitting there at a much cheaper valuation than the mega caps.
Oh, absolutely.
That's like the dream scenario for the bulls.
Yeah, listen, it's probably going to, we've seen it already, obviously. My expectation is that it probably continues into early next year. But to your point about, is the bull case dead? No, because again, the Federal Reserve raised rates by a lot, and that's presumably going to have some effects throughout the economy beyond what we've seen. It seems pretty clear that the sell side is all in on the soft landing narrative. But again, some of those things that you've started to see unfold, but bear watching.
Don't you think the Fed's done?
Maybe they raise one more time. Maybe they raise 2 more times. I don't think that really has a meaningful effect on either the broader landscape or my portfolio per se, or the universal my portfolio.